So, like everybody's talking about it, will King Dollar remain on its throne? Well, let's talk to John Carney, Breitbart economics, finance editor, and co-author of the famous Breitbart Business Digest. To some extent, John Carney, you started this speculation that King Dollar was going to fall off his throne. I'm not buying, although I will say we have met the enemy is us, but you still think the yuan's going to replace the dollar, really?
I don't think it's going to replace the dollar as much as we're going to see a fracturing of the world currency system and the world trade system, frankly. I think China does not want to continue to use the dollar, but it will not be able to convince, the UK is never going to start doing most of its trade in yuan. That's not going to happen. Most of the world will not trust China to become the reserve currency. However, Russia, sure, we've cut off Russia from the dollar. And so and Iran, sure, Iran will do it. North Korea, sure, North Korea will do it. So we are going to have, and China is out there trying to push this further on. This is part of what they want to do with Belt and Road, get everybody to start using their currency rather than ours. I don't think this is something that's going to happen overnight. But I will say, I think 10 years from now, there will be the dollar will be less dominant than it is right now.
So 90%, according to the Bank for International Settlements, 90% of the transactions in the world economy are based on the dollar. Now, I know Iran, North Korea, Russia, but that's only 12 transactions, John. The other 90%, and that's a joke, but you get my feeling. I mean, China, for example, is a country with capital controls, very little investment coming in and out because that's the way the Communist Party wants it. I know because we tried to open them up to financial activities and intermediation. They won't do it. So I just don't see, I can see more euro, although that never really developed. Once upon a time, the pound and the yen, but that nearly, I don't know, John. I would say to you this. Before we worry about the yuan, we should worry about 6 more years of heavy-duty spending and taxing and regulating that will make it create disincentives for people to hold dollars. That, I think, is the bigger problem. People just don't want to hold dollars because we've made such a hash of the underpinnings, the economic underpinnings. That's my biggest worry.
I do think that is a definitely genuine concern to have. We had a very good record on inflation. Basically, we had very low inflation for close to 40 years,
right, and
we blew that up. We came out of COVID. We spent, Biden came in with his huge, massive spending plans. There's no end right now. So right now, everybody who held dollars just found out that their account is worth 10% less than it was before we got into this inflation mess. So we really do need to get inflation under control because that will start to alienate people. But I do think that as we try to work for a lower trade deficit with China, that will leave China with fewer dollars. That's just, almost mechanically, we are moving in a way that will have China be less dependent, frankly, on selling stuff to the U.S. and the U.S. far less dependent on buying stuff from China. That will begin fracturing the currency around the globe. And I think a lot of countries like Saudi Arabia are going to, at least for a time, try to see, they won't know which way this is going to break, and they'll try to play both sides.
Well, perhaps. We're still running close to $400 billion trade deficit with China, despite protestations to the contrary. And I think, you know what, there may be some more yuan, but on the other side of that transaction is going to be the U.S. dollar. I think the Chinese want U.S. dollars, but we can leave that. John, we're going to get a CPI tomorrow and a PPI on Thursday. What do you think?
So I think that the market still sort of believes that inflation is just going to go away, and it's not going to. We are probably looking at another hot print on inflation. Yeah. Look, if inflation comes in above where it's expected to, I think the stock market sells off. I think people will become very concerned that the Fed might just not have, I think the Fed is locked in after the jobs report that they are going to hike in May. But if we get a very hot print on inflation tomorrow, I think we're going to see the market reevaluate this idea that there's only one more hike left. That if we, we get 0.4, 0.5% month to month, that's going to be cause people to start to worry. The year-over-year number is definitely going to come down. It's going to come down significantly because we're now lapping the high prices of last year. And so you have this base effect, particularly on the headline number where you had Putin invade Ukraine, and that pushed up the price of oil. So we're going to see that start to come out. But the month-to-month number is where I would focus, and I think it has the possibility of being pretty disruptive. I was
just looking down at the page, just looking at the Cleveland Fed nowcast, inflation nowcast. So they've got, for March, CPI 0.3, and for April, almost 0.6. And the year-to-year stays well above 5% for the next couple of months. And by the way, so does the core. And by the way, the PCE, that stuff is still close to 5. I mean, if you're still running 4 to 5%, John, I mean, I think that's the Fed's going to want to do something about that.
I don't think the Fed can afford to have the market keep saying, "Oh, they're going to cut right away." So, we have a whole bunch of Fed speakers this week. I think we are going to get the message out of them, particularly after tomorrow's CPI number, that this idea that we're going to have cuts is nonsense, and that the Fed is probably going to have to revise its view. The Fed itself right now says probably just one more hike. I don't think that's correct. I think if we get these hotter than expected numbers coming in, the Fed is going to have to revise that and say, you know what, we need to get the Fed target into positive territory. Right now, we're still under the inflation rate, and I don't think inflation goes away until you get it up into positive territory.
And on top of that, as a special bargain, gold is soaring, and I think the best performing asset is Bitcoin. Bitcoin. How about that for tight money? Bitcoin is soaring. Gold is too. I'm not sure I know what it means, but it's happening. So tight money advocates, hang on a second. More to come. John Carney from Breitbart, thank you very much. Now